a confused Fed, some really long minutes and no agreement on anything. And a bit earlier we talked about how they were the victim of their own transparency. I imagine this is a debate they don't really want playing out in public.
Well, it is playing out in public. You know, I mean, it's classic. You know, you put two economists in a room, you're lucky to get six opinions. So,
yeah.
You know, I mean, the inflation dynamics are part and parcel of that. You know, what I would just say is that, you know, I think the reason this is so difficult is because they don't have a very good explanation for why inflation is low. You know, if you think about it, you have a tightening labor market, you have less spare capacity in the broader economy. Over time, that should put upward pressure on prices. Now, I think what's offsetting some of that is a lagged impact from the foreign exchange rate. I mean, the dollar did strengthen quite a bit from, you know, let's say the middle of 2014 through early 2016, and we're probably still dealing with some of that. And also inflation expectations. I mean, there's been a persistent undershoot on the Fed's 2% inflation goal, and over time that begins to sort of fray longer run inflation expectations, and ultimately actual inflation converges onto expectations. So I think that's what's going on here. I mean, to me, that's as best I can figure. What I would say is that if they continue to allow the labor market to do what it's doing, over time that should put some upward pressure on inflation. So I kind of sympathize with that, and we're seeing it. I mean, if you look at average hourly earnings, you know, they've been picking up a little bit lately. You know, median wage growth is a bit stronger. So, you know, we'll see how this goes.
Well, let's talk about the potential policy response. The bias at the start of the year and as we progress through the year was, yes, the data might come in a little bit softer, but we're going to hike. And then it might come in a bit softer, but we're still going to hike because the general economy is okay, it's stable. Is the bias still to hike if we carry on getting 6 inflation prints that are soft, a 7th, an 8th, a 9th? When does it change? Where's the inflection point? When's transitory a trend?
Right. Well, I mean, there's two ways of thinking about this. The first is, it is true that a lot of transitory and idiosyncratic factors have been weighing on inflation, and so I sympathize with the Fed on that. It's also true that they've been running below 2% for a long time now. I think where we are right now, they need a very strong reason not to go. I mean, that's been the big sort of change, you know, since last year. You know, so I think if the jobs numbers continue to come in healthy and you get another tick down in the unemployment rate, the Fed will probably be ready to tee up another hike in December. You know, I don't think the bond market is somehow so omnipotent. I mean, if you go back to where we were earlier in the, you know, late last year, you know, no one thought the Fed was going to go twice, you know, in the first half of the year. But that's exactly what happened.
Yeah.
I think that there are upside risks to the U.S. economy, particularly from inventory investment. So I have been advising people, you know, I think now's a very opportune time to continue to take short positions in the front end of the Treasury curve. The Fed's going this year. I think the market's underpriced for a hike.